Good morning. Welcome Beyond the SEAF model. I'm Jack Kosar. This is effective for the week of August 11th, 2025. Let's get started. SEAF signals for this week. We retain technology and utilities, and we swap out communication services. We swap out industrials for communication services. So our top three: XLK, XLC, XLU. All looking relatively strong. Those rankings are a bit lower than we've been seeing over the last couple of weeks outside of technology. The bottom kind of coalescing with healthcare, financials, and energy. And, some intermediate in the middle, seeing some positive skews here from consumer staples from 8 to 6 to 4, and some negative skews from materials from 6 to 7 to 8 regarding their movements across the different time periods. Looking at our heat map. Really strong looking heat map here in terms of its concentration. We got our deeper reds here toward the bottom, our darker greens here up at the top, and looking at communication services with the strongest inflow in the trading week at 0.75%. That was significant. You'll see a little bit later that we're not yet seeing that on the relative outperformance chart in the rainbow chart, but still good to see those extra strength and flows coming in. Technology, again, taking a little bit of breather, but 0.11% on the trading week. And utilities at 0.13. Overall, last week we had a 2.59 increase overall in our assets under management. If you added up all the 11 sector spiders to be one number, it increased by 2.5%. With our largest day of the week last week being Friday with an overall gain of 1%. What does that mean for us regarding our total AUM? So I've been bringing up this chart relatively frequently. Reset here at the bottom on SPY since we did briefly break through the 21-day moving average. So what do we have here? This is our sector spider total AUM. So adding up all 11 sector spiders, assets under management, to one collective number. Now, the 11 sector spiders really comprised of the S&P 500. So this is really a different way of seeing how the AUMs for the different constituents of the S&P 500 are flowing. So instead of taking the AUM of SPY, we are taking the aggregate AUM of the 11 sector spiders that make up SPY and kind of plotting that here up top, and then below here is the S&P 500 price chart. What are we seeing? We briefly broke through that 21-day moving average, which we have been highlighting here before as being significant in terms of the direction of the overall market. That was only a test. We then came back up, and we have rallied off that 21-day moving average. And as you can see here, breaking slightly through this top. So we're actually making all-time highs for the total AUM. This number was tested twice and failed. We were playing with it here. Now, is this a clean breakout above that mark? No, we're still negotiating here, but it is a positive sign in terms of the assets, the S&P 500. That aligning with the fact that we are really offensively skewed here with communication services and technology as our two top sectors. This is telling us, there's a little bit of positive momentum in the market. Heading into our rainbow charts. Healthcare. Healthcare is our least again, making fresh relative underperformance lows versus the S&P 500. Healthcare continues to be a void. Why do I bring these up? If you've been watching these videos relatively frequently, I like to show this model not only as a trading model, which again, picking the top three and trading those equally in your portfolio, but also using the SEAF table as an indicator. Where do we want to avoid? Where is that money flowing out of? Healthcare is our worst sector according to our rankings, and we've really just been in this decline in relative underperformance versus SPY for at least going back a year, if not longer, with a big sustained chunk in the avoid territory going back really since late April. And it's been down. Continue to underperform versus SPY. Healthcare is a place to continue to avoid. On the reverse end of these things is technology. Money really sticking in this upper favored. We did have that brief little foray into neutral that bumped us out of our technology for about a week. We rallied right back in there, and we stay in upper favored. What has that produced since the end of the end of March? Very strong relative outperformance versus SPY. This is a very strong trend line here after what was really a sideways market for technology for quite a while. So technology continues to be favored, looking to potentially make all-time relative outperformance highs this week. For tech, tech continues its strength. Utilities. Utilities, a little bit of a sideways situation here, but relatively have been making some inroads in terms of its outperformance versus SPY on the short term amongst this longer sideways trend. We are starting to really crunch up into upper favorite here for utilities, so continue to be a place to watch. Utilities is one of those unique sectors as of late where it has been both correlated with a defensive position as well as an offensive position depending on how you're viewing utilities. Viewing utilities as a safety measure, as people still need to have electricity and water during potentially down markets, would be used as a defensive skew, and then also used as an offensive play with AI and its need for that increased technology and the potential CapEx spending that could happen in these utility companies. So as of right now, it is aligning itself with offensive technology and communication services. So that's kind of been watching that one. It's been it switches sides sometimes. So but utilities looking relatively strong. Communication services, I mentioned earlier, we shot up into upper favorite here based on really strong numbers on the trading week. Would really like to see sustained flows in that trading week as we were sitting down into neutral, and that inflow really kind of pushed us up. We have not yet seen the really push on the relative outperformance versus SPY yet, as we're still trading in a bit of a sideways market for communication services, but a couple of sustained weeks of these strong flows, and we will start to see that relative outperformance part on the chart take off. But, again, looking relatively strong for communication services. Last but not least, second to least, is energy. And again, wanted to show energy has these little spikes up. It shows little relative outperformance, but nothing sustained, and we continue on this really downward trend for its relative performance versus SPY. Continues in the avoid. Energy had a pretty strong outflow, negative 0.36, which is pretty close to our significant negative 0.4 that we're looking for on the flow. So if you're looking to get into energy, still is not the time. Energy is a deep avoid. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.